30 years of trying to accumulate wealth. Well, firstly, don't forget, income is worth more than capital. Because if you have $1 million and you stick it in the bond market, you're going to get $10,000 a year. Right? But for the average person to, over a couple of years, increase their income by $10,000 is not that unachievable. So it's like being a millionaire. Every 10 grand you have is like being a millionaire in terms of your earning power. So that's the key thing. Then after that, it's like, okay, look at the opportunity set in front of you. So let's say you're in a good job now, you're starting to invest, you're starting to save for the future. What is it? Well, my first thing always for everybody is, if you can, buy a home. Now that's the problem because they're expensive in most places, and I'll come on to that in a bit. But if you can, so I was really lucky. Back in 2000, I was living in a fancy apartment in London that I had a mortgage on, etc. And then I had a bonus, and I bought a house in Spain, which wasn't very expensive. It was $250,000, which nowadays you can't buy anything for. But it was a 6-bedroom house on the side of a hill near a beach town. The point being is now I've got a place to live. I could work a bar job and survive. Right? I'm now super robust. So I can now take risk. That becomes interesting. When you're in a safe place, to take risk becomes very attractive. So I would urge people to think about that. Get to that point of safety where you could take risk, then take risk. So what does risk look like? Well, right now, the equity markets are at all-time record valuations. Sure, emerging markets have done relatively worse, so maybe they're relatively more interesting, but they're expensive. Bond yields are all-time lows. Credit, all-time low yields. So you're not being paid to take risk. Most of these have a future expected return that's negative. But then there's a whole different world out there, which is the world of a new financial system being built, which is Bitcoin and Ethereum and DeFi and all of this stuff that people are hearing about. And Gen Z and millennials are much more aware of this because Gen Z particularly have lived in Minecraft and all of these things where tokens and digital assets have value. Right? It's not abnormal. It's abnormal for a baby boomer to think about that, but everybody else is like, yeah, of course it is. Tokens, of course we live with different currencies in different worlds. It's not a problem. So it's a small leap to Bitcoin, which has a future expected value higher than any other asset class in terms of risk reward. Sure, it goes up and down 50, 60, 70% down, but its upside is 10, 50, 100x. So if you're young, you can afford to take that bet because it can be life-changing. It's the same kind of bet, but better than the baby boomers got in 1980 when they were about 30 years old. Because what did they get? When they were 30 years old, they got a stock market at record low valuations and a bond market with record high yields. You almost have to be an idiot not to make money. Millennials are faced with something much harder, as are Gen Z, because property is expensive too, unless you move. The digital economy, and particularly COVID, has shown that we can move anywhere now. So if you think that you can get a quality of life in Thailand, because you're in Hong Kong, and you say, I'm not going to hang around in Hong Kong any longer, I'm going to go to Thailand, you can easily run a business from Thailand. Okay, so now you've got a quality of life advantage. You could probably buy a house for pretty cheap. Okay, so now you're safe and secure, and now you look at your future potential, well, Bitcoin might be that answer. So it's going to be a new world, and that's good, because you guys, the millennials and the Gen Z, are not going to be following the old rules. And once you realize that, you're liberated.
Yeah, fascinating. And in a similar vein, it seems at the moment that there's a real bifurcation that's taking place in the economy, whereby you have big box retail and companies like Amazon, which seem to be scarfing up a lot of this stimulus money and comprising a bigger portion of the economy, especially with FANG stocks dominating equities. And it seems like a lot of the smaller businesses are being wiped out. And I remember watching a video in which you were describing the phenomenon in Spain, in particular in relation to restaurants and cafes that have been around for ages. I remember there was a restaurant here in Hong Kong that had survived both world wars, had been around for over a century, and then it closed down during this period. And I think that that's something that's probably very relatable across the globe. So I was wondering whether you think that this is something which is going to be exacerbated, or do you think that there might be a revival of small business?
I think if you're 30 years old, this is the biggest opportunity of your lifetime. Out of crisis comes opportunity. So what you've done is you've cleared out a load of old businesses, and the world is changing. I noticed this when I went to Japan a few years ago, is it bifurcates between the big brands and the big businesses, and then artisanal stuff. And we've seen that movement already across the US, across Europe, where people are opening, young people are opening like a cool baker's or a, cool clothing place where they make cool clothing themselves and stuff like that. So there is a bifurcation that's going on. And what you've just done is cleared out the high street of all of the old shit that needed to go. Now, that's painful and horrible because it's people's life savings and their businesses. But thinking like you should is, okay, all of that old stuff is gone. Rents are collapsing. I could start a business. Mm-hmm. Your probability of success of starting a business in a down cycle is so much higher than starting it when rents are high, you're competing for everything. And it is about doing unique stuff. Find your niche. The world used to be like Amazon, broad, but we're all finding that deep is the other strategy. Let's say you like baking, well, become the best. Because guess what? You will always have business. Or, you are particularly good at a certain thing. That opportunity is there. So retail is going to be a huge opportunity within this. It's just different retail. Don't sell stuff that everybody else sells. Sell unique stuff. We've seen it with the rise of, farm-to-table eating and food and all of this stuff. We've seen it with clothing. We've seen it with jewelry. We've seen it with all sorts of things. So there's opportunities for creative outlets, which you couldn't do in cities because it was too expensive. I mean, to have a creative idea for a business in New York City or Hong Kong or London, you get marginalized to the kind of other neighborhoods. Well, guess what? That's going to change. So yes, it's terrible, and yes, it's going to be lingering, and yes, it's miserable for many, but change is always opportunity.
Yeah, absolutely. And that's a very positive way of looking at this. Something related to this, actually, you spoke earlier about the democratization of information. I was wondering what you think the impact is going to be on higher education, the fact that now we have all of these independent content creators and thought leaders who are able to provide very practical and very relevant knowledge to the younger generation in particular. What do you think the impact this is going to have on higher education, universities?
I think this is massive. Right. It's something that we're all over. When we started Real Vision, there was a friend of mine who was running the largest television company in the UK, private, non-BBC, and YouTube had just launched. And I said, how's business, blah, blah, blah. I said, great, blah, 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 but I'm worried about YouTube. He said, why the hell do you care? It's cat videos. This is like 2006, 7. He's like, it's cat videos. He's like, no. He goes, we pay £100 million for a broadcasting license. And now anybody can become a TV company. So fast forward, and COVID's just been the accelerant. It's like YouTube has just turned up. Anybody can become a university.
Right.
You don't even need premises. It's so disruptive, you can't get your head around it yet. Yes, of course, excellent centers of learning, top universities, Harvard, Oxford, whatever, they will always persist, but their offering will change. But there is no reason to have, particularly in the US, hundreds of universities spread around places. It's not going to happen, because I know at Real Vision we could create an applied finance course that's better than 90% of what's out there, and for a fraction of the cost, because we'd start from scratch. No buildings, not millions of lecturers, all of the stuff that goes with it, all gone. So the cost of education is about to collapse, and we want to be at the forefront of that.
Fascinating. Now, obviously, you've done a lot of fantastic videos on the coming retirement crisis, and that was actually probably some of the first content of yours that I watched. And I've been wondering recently, do you see that crisis sort of dovetailing with what's going on at the moment?
Yes. So the retirement crisis is essentially the fact that the largest cohort of people in the world is the baby boomers. Yes, the millennials in the US are slightly larger than the baby boomers, but elsewhere in the world, nobody had such a large millennial population. So the baby boomers are everything. They hold all the wealth, they have all the pensions, and they're all between 60 and 75. So they're hitting retirement age. Problem is, particularly in the US, is they have massive overweight equities and high risk because they never got enough money into their pensions. Now, when you go into recession, equity returns generally go down. We've got this weird market right now, which is bifurcated. A bunch of equities are doing terribly. The big names are going up. Well, guess what? The big names are going up because they're driven by millennials, because they love the stories of Tesla or whatever it is, Apple. But actually, banks, oil companies, industrial companies, they're all doing terribly. And that's partly because the baby boomers are forced to sell equities over time. Because if you think about it, when you stop earning money, you need to sell your assets over time to realize the money to spend. The problem is as that goes on and bond yields go so low, these guys don't have enough money to retire on. Now, if that stock market rolls over again because the economy actually ends up weighing on these high-flying stocks that everybody thinks are bulletproof, then we've got a huge problem, because you're going to wipe out the retirement savings at retirement date of people who now can't earn a new income. So that's a really terrifying situation. Again, for the millennials, you've got a bifurcated view here, because on one hand, you don't want your parents to get screwed over by this, because it's going to become your problem. But the other side is like, yeah, please, I'd like you to sell your expensive houses at much cheaper prices and sell your equities to me at much cheaper valuations. That's how you should be thinking in this. But you've got the other emotional side is, well, I don't want to see my parents go through hardship. But that's where we are. That's the situation. And that will play out over the next 10 years.
Now, on a more personal note, I found your background quite interesting. And there was one thing in particular that really stood out to me, and that was the fact that you initially applied to work for Goldman Sachs, and then you received the rejection letter. Do you want to tell us a little bit more about that?
So I was pretty good at school by around 15. Then I discovered girls. Then I went to college and discovered cars and the pub. And then I realized I could just coast. So I coasted through, failed a bunch of exams, had to retake them, and then ended up only getting one offer for the university. So I had one place, I had no choice, and it was a pretty crappy university, but it's all I had. So I did a degree in economics and law, and I got a decent grade, a 2-1. And I came into the job force, bang on a recession, 1990. And I had the choice of I didn't have a choice. I wanted to do either two things, marketing or finance. I just lived through, I wrote my dissertation on junk bonds because it was the racy time of the 80s, because I was at university kind of 87, 88, 89. And that period was the kind of go-go years of the late 80s when everyone was driving a red Porsche and wearing braces. And it was the greed is good era of Wall Street.